Imagine a world where the most valuable resource isn't buried deep in the earth, but etched onto a microscopic sliver of silicon. For over a century, crude oil was the undisputed king, the black gold that decided the fate of empires and global economies. But today, a new liquid gold has emerged, flowing not through pipelines, but through the sophisticated circuitry of advanced semiconductors. Welcome to the era of the hardware war, where the brains of AI have officially become the new oil of the stock market. To understand why chips are so critical, we have to look back at how John D. Rockefeller built the Standard Oil empire. Rockefeller knew that whoever controlled the energy supply controlled the very pulse of the Industrial Revolution and modern civilization. In the 1900s, oil fueled the engines, the factories, and the transport systems that allowed the global economy to explode. Fast forward to the 2020s, and we find ourselves in a remarkably similar position, but the engines have changed significantly. Today's engines are massive neural networks, and their fuel isn't petroleum, it's the massive computational power provided by specialized AI chips. As Jensen Huang, the visionary CEO of Nvidia, often says, we are currently at the beginning of a new industrial revolution. In this revolution, software doesn't just run on hardware. Hardware creates the very intelligence that software then uses to operate. If you look at the S&P 500 today, the concentration of wealth in hardware companies is mirroring the oil booms of the past. The Magnificent Seven tech giants are spending tens of billions of dollars on capital expenditures, primarily to secure these precious chips. This isn't just a trend, it's a structural shift in how value is created and captured in the modern financial markets. Think of the data center as the new oil refinery, turning raw data into the high-octane fuel of artificial intelligence. Without these chips, the most advanced AI models like GPT-4 or Gemini would be nothing more than lines of inert code. The complexity of manufacturing these chips is so high that it makes deep-sea oil drilling look like a simple weekend project. A single state-of-the-art lithography machine from ASML costs over $200 million and is the most complex machine ever built. We are talking about printing features on a chip that are 10,000 times thinner than a single strand of human hair. Because the barrier to entry is so incredibly high, a few dominant players have formed a silicon OPEC of their own. At the center of this storm is Nvidia, a company that has seen its valuation rocket past $3 trillion recently. Nvidia's H100 and Blackwell GPUs are the light sweet crude of the tech world. Everyone wants them, but few can get them. In the words of author Chris Miller in his book Chip War, semiconductors now define the global balance of power. For investors, this means the volatility of the chip sector is now a primary indicator of the health of the entire market. When the demand for AI chips fluctuates, it sends shockwaves through every sector, from cloud computing to retail and manufacturing. But why is the stock market so obsessed with hardware right now? The answer lies in the concept of compute. Compute is the new currency. The more compute a company owns, the faster they can innovate, automate, and dominate their niche. We are seeing a massive land grab where companies are stockpiling chips like countries used to stockpile strategic petroleum reserves. This brings us to the concept of the silicon shield, a term used to describe the geopolitical importance of Taiwan. TSMC, or Taiwan Semiconductor Manufacturing Company, produces over 90% of the world's most advanced AI chips today. If oil was the reason for the conflicts of the 20th century, semiconductors are the focal point of 21st century diplomacy. Any disruption in the supply chain of these chips could bring the global economy to a grinding, silent, and digital halt. Smart investors are no longer just looking at software margins. They are analyzing supply chains and fabrication plant capacities closely. We must also consider the concept of the Jevons paradox, which states that as a resource becomes more efficient, we actually use more of it.
As chips become more powerful, we don't save energy, we build larger models that require even more specialized hardware to run. This creates a perpetual cycle of demand that fuels the long-term bullish case for the semiconductor industry in the market. Some analysts warn of a bubble, but others argue that we are seeing a fundamental re-rating of what hardware is worth. In the old world, hardware was a commodity with low margins. In the AI world, hardware is a high-margin proprietary moat. Let's look at the financial statements of the big chip makers. Their profit margins are starting to look like software companies. This software-ization of hardware is one of the most significant transformations in financial history that we have ever witnessed. However, every war has its casualties, and the hardware war is creating a massive divide between the haves and have-nots. Companies that can't afford the massive entry fee of AI hardware risk being left behind in the race for digital supremacy. This is why the stock market is rewarding those who control the physical infrastructure of the future so very handsomely. Beyond the big names, there is a whole ecosystem of cooling systems, power management, and specialized materials that investors overlook. A high-performance AI chip generates an immense amount of heat, requiring innovative liquid cooling solutions to function properly. The companies providing this infrastructure are the picks and shovels of this new digital age gold rush we are witnessing. As we move toward AGI, or artificial general intelligence, the demand for compute is expected to grow by orders of magnitude. Sam Altman of OpenAI has even suggested that the world may need $7 trillion in investment for chip infrastructure. While that number seems astronomical, it underscores the sheer scale of the transition from a carbon-based to a silicon-based economy. We are also seeing a shift toward custom silicon, where companies like Apple and Google design their own specialized AI processors.
This vertical integration allows them to optimize their hardware specifically for their software, creating a seamless and powerful user experience. But even these giants still rely on the same fundamental manufacturing bottlenecks that define the global hardware landscape today. The stock market is currently a giant weighing machine for these hardware capabilities and the future earnings they will generate. When you see a chip stock drop 10% in a day, it's often a reflection of global trade fears. Conversely, a breakout in chip stocks often signals a new wave of optimism for the entire technological future of humanity. History shows that the infrastructure phase of any revolution is where the most reliable long-term wealth is usually created. During the railroad boom, the wealth wasn't just in the trains, but in the tracks, the land, and the steel. In the AI boom, the tracks are the fiber optics, and the steel is the high-purity silicon inside the data centers. We must also acknowledge the environmental cost, as these chip-heavy data centers consume vast amounts of electricity every day. This is leading to a secondary hardware war in the energy sector, focusing on nuclear and renewable power for AI. The synergy between high-tech hardware and energy production is becoming a major theme for savvy institutional investors to follow. If chips are the new oil, then electricity is the new pipeline that must be built to deliver that power. Looking at the charts, we can see that the correlation between semiconductor indices and the broader market is at all-time highs. This means that even if you don't own chip stocks, your portfolio is likely influenced by the hardware war's outcome. It is an interconnected web where a shortage of neon gas in one country can affect the stock price of a car maker. This is why financial education in the 21st century must include a basic understanding of the semiconductor life cycle and supply. We are moving away from an economy of bits alone and returning to an economy where atoms matter once again. The physical reality of hardware is reasserting itself over the purely digital dreams of the early internet era. As we conclude our journey, remember that the hardware war is not just about chips, it's about the future of intelligence. It is a competition to decide who will provide the brains for the next generation of human progress and innovation. For the investor, the strategy is clear. Follow the compute, understand the supply chain, and watch the hardware closely. The era of cheap, abundant energy is being replaced by an era of expensive, highly complex, but infinitely powerful computation. Whether we are ready or not, the oil of our time has been found, and it is made of silicon and light. The hardware war is just beginning, and the stock market will continue to be its most transparent and volatile battlefield. Stay curious, stay informed, and always keep an eye on the brains behind the machine in this changing world. Thank you for watching. Subscribe to my channel and master the strategies needed to build genuine, lasting financial wealth, and I will see you soon.